we're jumping right into this, Brandon. When we had a little bit of hot inflation number on CPI, and inflation data said we were running hot and
Mhm.
they can't lower rates. And the Fed came out and said, "Don't look at that one. Don't look at that one. We're just going to focus on PCE. We always focus on PCE." So, what was your hot take on PCE today, Brandon?
Well, I mean, the thing is on the CPI report, I mean, the market was okay. They were fine with really hot inflation. And people were talking about, yeah, but there's some internals in here, financial services and something else. It's pointing to the fact that PCE could be lower than expected. So, but again, that didn't really materialize, did it? I mean, so if you look at their PC response or the summary, 0.3% in January, following a 0.26% increase in December, 0.3% in January again for core. Yeah, we really didn't see the slack, did we, Blake?
No, not at all. And in fact, it's equally as hot as they thought. But then I saw worse data. We'll get to that here in just a minute. You've obviously got your agenda here on the board, and you want to give us a quick summary of what we're going to cover?
I know I'm like
I
struggling here
jumped
with
the gun.
PowerPoint.
I jumped the gun.
No, no, you're fine. I'm like, I just can't find where my that little slide is, you forward, but let me go back. I'll
Okay.
find it over here. But anyway, so we're talking about, so the kind of leading into this, I mean, we saw yesterday, obviously the market sold off. We're going to talk about how bad is it, right? We're going to look at what percentage of the percentage declines from 52-week highs. One of my themes this year is the fact that Mag 7 stocks are going to lag and gold is going to lead the S&P. Sector rotation, we're talking staples, we're talking energy, bulls and bears. But today's expected move was $49, Blake. I mean, is that going to materialize? So if we look
Well,
at what happened post,
let's look at yesterday, for crying out loud. We had about same $50 move and we hit 100 on from the high to the
right?
low.
So can we do it 2 days in a row? And we're kind of drifting slightly higher, and we got the data here, not less than 15 minutes ago, or a little over 15 minutes ago. We are bumping a little bit. Now we're grinding. Wait, that's not very good. Putting those two together, but the market's bumping and grinding today after the or grinding the bump, oh no, bumping and then grinding. We got the bump, now we're grinding here, consolidating in technical terms. But I think we break lower. I just don't see that this is going to lead to a higher result in the market.
No, and the data that we're going to get to here on this is going to show us additional reasons why it's got to go lower. It's not a good thing. It is not a good thing with what we just had to come out here. So um I think you're right. I don't think we're gonna have the same kind of day as we did yesterday, but I do think it's not good. So your question, how bad is it? Significantly?
Yeah.
Dramatically?
Like so Don threw out some stuff yesterday that again I think are very relevant. I mean, the whole 59.11 on the we broke that yesterday. We're now getting down here. I think it's all a function of levels, right? What levels do we break that are relatively critical, right? 58.50. What happens if we start to gain some degree of traction? We got the low back here on the ES, 58.07. I mean, as we test these levels, if we break, I think there's the possibility we do see more selling. And that's when we look at the VIX. I mean, the VIX right now still contained in around that 20 level. We kind of bumped above it yesterday. We're kind of flirting with that high from the last couple of days. If we start to break some of these lower bounds, we might see the VIX start to spike. And one of the things that I like to see is that the 3-month VIX is higher than the 1-month VIX. And we came really, really close to that yesterday. So we're basically saying the 3-month and the 1-month are together. February 14th, they were really separated. Now we've come back together. And normally you'll see this go below one. So from my perspective, I'd like to see us sell today. I'd like to see us close near the lows. I'd like to see a breakout in the VIX if I want to be bullish. And so this idea, bull trap or bear trap, again, I don't think inflation is going to help us today. And Blake, so we got to this on the disposable personal income. Do you want to
Yeah.
provide us some color on that
Yeah,
slide
so
there?
I mean we can talk about prices, right? That's what PCE is supposed to do. So if you're looking at this and you're looking at PCE, personal consumption and expenditure is the other aspect of this. So we can talk about prices and whether inflation's too hot or too is slowing down. But when you see the amount of money we spent month over month, and from prior period, you can see we were spending on the left-hand side, percent change from prior period as far as spending goes. We went from point or 4 point whatever down to negative point or negative 1%, if I'm looking at my numbers right. And so as we're looking at this, yeah, left side is inflation, right side is percent spending or
Okay.
outlay of
Higher.
it.
Yeah.
Yeah. And so as we're looking at that, that's a major drop. We're spending less. So when you say, well, inflation's high, but we're still spending, consumers are still there, they're still out in the market. They're not. We slowed down dramatically. This is the first time in the last 2 quarters that we saw a decline so far that we went negative from the previous month. Yeah, we had less spending as far as spending growth back there in August, but this is a reversal. In
It is.
January, we spent less.
And even when you think about just the pending home sales data this week, I mean,
Mhm.
we're at a record low right
Record
now.
lows. Yeah.
Record low. I mean, things are, this is not, and this didn't just happen in the last month, right?
Mhm.
This stuff's been building for a while now, and it's just, we're just starting to take notice of it. And we'll look at kind of staggered in a moment. But so changes in monthly consumer spending, housing and utilities down here up 29%, but motor vehicle parts.
Yeah, and the motor vehicle and parts, when we're comfortable, we like new cars. I like new
Right.
cars all the time, but as far as
He's not a car guy.
I like cars.
Right.
But when we're unsure, we're not spending money on new cars. We're gonna make it do, and maybe have to do repairs and do parts. But as far as motor vehicle sales, that is dramatic.
Yeah.
And recreational goods and vehicles, and these
Non-durable
are all the
goods.
non-necessary.
Yeah.
And so when we see that housing and utilities, you've
So
got to think
food,
of these ones up
housing,
here. This is living indoors and eating food and having electricity, having utilities. That's it.
right? We're keeping warm.
Right.
We're fed, but we're not doing much else. I mean, clothing down. I mean, again, Nike got upgraded. Yet, look, we're seeing that we're not buying stuff at to the same degree we were that are more discretionary. And so we look at kind of the state of the S&P right now. Again, we're kind of off our highs. Let's bring up the SPX. Nope, bring up the SPX here. But yesterday's sell-off, someone asked Don in yesterday's session, and again, it's an innocent question, and a lot of people are thinking it. That's why I'm bringing this up. Okay, is this the where I need to get back in for a long-term position? I'm like, folks, we're not very far off the highs, right? For the S&P 500 generally. And yes, the signal we got back on the 14th was for a 5% to 10% correction in the S&P. We're only 5% off. I mean, you go back to the 2000s leading into the financial crisis, you got a 5% correction in the S&P every 3 months. It was very regular. It was routine. So I think what we're getting back to at a minimum is a routine of more of a two-way market, which we should all appreciate. But certainly some areas of the market are catching where the market has a cold. They've got pneumonia. And I kind of gave this corollary back here saying, look, this was over 8% decline in the S&P. The NASDAQ was down 13%, but the average NASDAQ stock was down 46%. So when we think
Yeah.
about, baby, it's cold outside right now. I mean, how cold is it for components in the S&P 500? So Blake, gold's only down 3% off its highs. S&P is down 5%, but look at these other names and their percentage declines from their 52-week highs.
Yeah. I mean, and I was looking at AMD because we talked about AMD and Intuit trying to fight Nvidia, and they're down 56%.
Yeah.
There's a comment.
MicroStrategy, favorite right there. MicroStrategy balance here. I mean,
Well, not only we're off the highs significantly here, but no, we're not off the highs for the whole market, and there's still a lot more downside before we're in a true bear market. But as we're looking at this, one of the comments and I barely saw this. I try not to spend much time on social media, but this protest day, today is the protest day. Don't buy anything from anyone. The fact that I didn't hear about it until 2 days ago, I'm going to bet you that it's not very well organized. And Mark, if they do pull it off, do you understand? They can say, look, we're going to show them how valuable we are. We're already in decline. We just showed you the personal consumption expenditure. We went negative already. And what this is this will be the law of unintended consequences. They can say that, yes, we're going to show you that we're going to buy nothing from anyone. But the problem with boycotting a single day and simply doing that is that people bought the stuff they needed the previous day and are going to buy the stuff they need after
Right?
the
It's like
fact.
one day,
Yeah,
and
it won't have any effect other than that we're in a slowdown anyway.
let's be
It's a
honest, their
poorly
funding's probably
organized
cut
thing.
anyway. They
What's
probably
that?
didn't get their check, you
Yeah.
know. So yeah, I mean, it's funny. I went to this protest back for the Iraq, the war in Iraq, and I kind of had my own sign standing amongst them, and none of these people were from Provo. I was like, they're busting in. It's like, but anyway, but look, I mean, but this is where again I've kind of laid this out a lot. Is that look, I mean, how do you hedge if the S&P is down 5%? How do you hedge when if you're an MSTR down 56% or Nvidia's down 22%? It's tough. Amazon even down 14%. The realities right now is that look, this is why the first response to when you're expecting volatility is always to take profits and then consider hedging. And so again, this is just a great illustration of that concept. And then there's some stocks you just can't really hedge. But Blake, Bitcoin, wasn't that supposed to be preserve it's a capital preservation, right? I'm like, why is Bitcoin and Ether's down what 46%, nearly
Hmm.
50% from its 50-week high? Why is it that crypto is performing so poorly?
Because it's the same thing I've said for how long? How many months? How many years at this point? Bitcoin is not a currency. It is a risk on asset. So when we have risk on behaviors, low volatility, people love the Bitcoin. When volatility is high and we are hedging, it is a risk off asset when volatility is high. And so it's you can't fight the math.
Yeah.
It is
Well, I
just
mean,
math.
I think of us / ETA. That's our Ether futures.
Mhm.
This is not Ether,
No,
right? This is
it's
a
not the
paper
technology. It's
market. And when you
yes.
think about people investing in crypto on some sort of platform, right? Trading crypto on some sort of platform, there is leverage. You're not buying it one for one. It is paper, right? So what's happening right now is that we saw that going into this, the expansion in consumer credit was all about what? It was all about margin expansion, right? What's happening right now is the margin, the retail trader is now saying, oops, they're starting to pull back the reins. The paper market right now is getting ripped apart, right? And so that leverage comes out and you start to see prices normalize. Now, again, when do we start to see? I believe that Bitcoin is money. However, not everyone's treating it in money. So most of the utility in Bitcoin, a lot of the stuff, it's about what? Trading it. They think they're going to make money on it. Well, in theory, you shouldn't be able to make money on it. You should have a zero return by holding it. So if
Yep.
it's truly money.
Yep.
But even gold experienced it a little bit a little bit here. The paper market, hey, gold's down a little bit more, right? This is just since the inflation data came out, right? Hot and expected, yeah. But look, boom, we're starting to see selling here, right? Dollar is strengthening, right? We're seeing that credit is coming back in mark to market, and so again, this is an issue. So again, Bitcoin ETFs had the biggest one-day exodus since its debut at nearly $1 billion. The crypto bros, the meme stockholders, they're feeling it here, right? Now, is this atypical to see this kind of regression? No. I mean, actually, for year one, Q1 after a presidential election, market generally speaking does not do well. It's
Yeah,
one of
and
the
you were
worst performing.
I was just going to say you pulled some really interesting data here. Brandon doesn't sleep, so here I am trying to sleep, and start
I
getting.
got up at
Oh, I'll be.
1:30 and I could not go back to sleep till like 4:30.
I keep getting these alerts from
That
Brandon
was like
sending me
11
things.
o'clock. Come on, Blake.
Hey, when we wake up this early, I go to bed early. Anyway, so I'm getting alerts from Brandon late last night of all the things he wants to talk about. And this, like I said, this pullback first quarter is not that unexpected, and it's consistent across the first month and quarter because most of the time we're dealing with the devil we don't know. This time we're dealing with the devil that was once here before. And so it should be less of a surprise, less of an unknown that we're dealing with on post-election. And yet he's pulling out all new bag of tricks. And so I think that's what part of the reason why we see the uncertainty and questions and performance in that first quarter on a presidential cycle.
And if we kind of look at, I got some stuff like just kind of, this is the S&P 500 above the 5-day moving average, 34%. I mean, this is an interesting phenomenon because if Mag 7 stocks are selling, right? If they're going to be marching lower, except for Meta, um, the internals in the market, I mean, Don looked at this yesterday. Look, I mean, the advanced decline is not terrible, right? I mean, it suggests there are areas or pockets of strength in here. It's just that the Mag 7's overwhelming the broader market. And obviously the fluff stocks that we've been talking about, MicroStrategy, Palantir, and the like, are feeling it. Stocks above the 50-day moving average, 48%. I mean, we were down here at 16%, right? At the turn from 24 to 25. I'm like, there's a lot more room for the market to decline if it wants to. Near term, we're certainly kind of oversold here a little bit, but it's not awful, right? I mean, we're 55% of stocks are still above their 20-day moving average. But remember, folks, it's just like the idea is that, look, yes, the advanced decline, the breadth may not look bad, and we may be able to muddle through. But if the Mag 7 stocks are the ones that are going to experience the weakness, it's going to be hard for the market to get back up and really perform well this year. And so, again, just expect that we may see more weakness, and it may not be today. We might even catch a short-term bounce here. Again, I'm looking at that. We're right down to that level volatility-wise on the 3-month to 1-month VIX. We could easily see a little bit of a bounce. But if we look at skew, again, are we pulling down our hedges? A little bit. We're down at 149. There's a lot of room for this to come back in. So it's good to see it's down, but a great area is down. It's down 115, 120. It may take months. This looks a lot more like 22 than 24.
Yeah, and it sounds like I mean, the way you're saying it may not be today, it may not be tomorrow, but and
We
the
make just
the the threat, the veiled threat of the it's it is. I think we are a long way from determining what this is going to be, and and I'm not going to get into the politics of this, because I don't do that. But one of the things I keep saying is there's no example of tariffs working out where it does what you think it's going to do, what it does the intention. Even the Don, not our Don, the Don, is saying that he's possibly going to hold back the tariffs to help the markets. And it was what, a week ago that he said, I don't care what the markets think. I don't care what the
right.
markets do. And now he's realizing, oh,
Yeah,
because
I know. And
people's values and assets are here. This is what the consumer's net worth is based on, their house and their 401k.
yeah,
So,
the housing thing is huge, right? I'm like, housing prices come back in. The reality is we have decades of excess, right? Of massive debt. I'm like, again, whatever path you're trying to negotiate, it's not without risk. And from my perspective, I've always used this. If you really try to, okay, we're going to hit the reset button, we're going to go more towards a market-based economy, right? That's based on savings and investment. It's about a 3-year, yes, I'm doing the baseball three. It's about a 3-year process. We've seen it historically. And so if they're trying to go that direction, we'll see whether they can or can't or are, if it's just rhetoric, but at least in the initial reaction saying, okay, it looks like we're pushing that way. It's not without pain if you're trying to restructure it. The pain may be greater if we try to kick the can, but eventually you're gonna have to feel the effects of pulling forward so much growth through debt over such a long period of time. So again, as we look at stuff going forward here, we're looking at consumer staples, Blake. I
mhm,
try to create a professional image on
that's very nice.
Copilot for consumer staples. But I mean, that definitely, and we've been kind of hitting this really, since December, November, dividends, staples, utilities. What's a consumer staple, Blake?
Stuff we're going to buy every day, even if things are tight.
Right. You're going to buy toilet paper,
I'm going
right?
to,
And
yeah,
if,
the
if you
toilet paper
can't buy it like
index.
in 2020, you want to buy it, right?
Yep.
There's no substitute.
Yep. It's the
Heated
stuff that
bidet seats, we're not, that's not American.
well, yeah, you throw me off there. So yeah, and this is what I talked about in the video, and I'm not going to take a lot of time on this one. Go back and watch yesterday's video. Consumer staples are one of the ones that I've been talking about for a while, and I said this is where we're going to find the safety. And sure enough, we were up 1%, 1.5% when the rest of the market was down, or the technology sector was down 1.5% yesterday. So we're definitely seeing the push to stability because even if things get tight, even if we saw like we saw in PCE today, spending went negative, or we
Yeah.
saw contraction in spending from the previous time period, we're still going to buy the things that we do every day. We're going to buy less of the things that are unnecessary.
Yeah.
And that's why we're seeing this rally.
Now, UK Race says newspaper is a substitute. And here in Utah, up in the mountains, we have what's called lamb's ear. This looks like it's a leaf that's really fuzzy,
A
but
really
I don't think there's
broad,
enough
fuzzy
lamb's ear
leaf.
for everybody, right? So,
I'm gonna grow it in
but
my garden.
consumer staples, the best performing sector in the last 3 weeks, 1 week. I like to do a ratio of cyclicals to staples, and
Mhm.
so I just do a composite symbol, not of itself. But I always put this. But we saw that there was a breakout back here 3 weeks ago, no, 4 weeks ago, technically. So right here, we had the break on a 4 week rate of change favoring staples, the very first time we've had it going back since July. So that was a big break. Every Friday, I kind of go over these ratios or try to. And that was our signal to rotate towards staples trades February 3rd. In last 3 weeks, again, that's the best performing sector. And except for real estate, the only positive performing sector in real estate is just getting a little bit of a boost because bonds are. TLT's certainly up off its lows down here. And I'm not
Yeah.
sure how long real estate and junk bonds can hold up here. So, but
Well, and they
Blake,
didn't, and we really didn't see the mortgage rate shift, even though we saw bond prices go up and yields go down. We really didn't see the shift in
Mhm.
mortgage rates. So that's not gonna, I don't think that's long lived.
Yeah, and so so what are some of when we think about consumer staples? We'll skip to bulls and bears for
Okay.
staples. What are some of your plays for consumer staples here?
Procter Gamble, Walmart, those are my two big cores that I always look for because even though I love the Costco, I even commented in the video, I'm not buying Costco. It was still free falling, or not free falling, but sliding either
Fine.
way. And so, this is where you say, okay, what are we going to spend money on? And, even though I'm not a tobacco user, Philip Morris and
Yeah,
is certainly one, and Altria. But
Altria is one that I had right here back option activity. It's lagging, right? But it may catch up to Procter
yeah, and so I like Walmart. I like
or
Coke and Pepsi. Well, Coke primarily as a dividend payer. I think it's too late for uh, Coke, but yeah, Procter and Gamble, just the core, the stuff that we're going to always spend money on. Uh, Colgate Palmolive was okay, but it wasn't as strong as I would like it to be. But these are the ones we want to brush our teeth. I want you to all brush your teeth, especially if we're going to interact in person. But these are the ones that are going to continue to gain and will continue to see money being spent. So if they just maintain their margins, they will thrive.
Well, and the thing about this is, I mean, sometimes you have the element of areas leading and lagging, and sometimes those laggards play catch up.
Mhm.
As again, if this consumer staples trend continues, so yeah, you might have stuff like Coke, which we did analysis on back here, and the 61% retracement area, 60 was that kind of value area for it. So we kind of talked about entering back here. Well, it's gave
Yep.
it back up again. It's expensive again. Well, what's inexpensive? Maybe Colgate Palmolive is, right? So the idea is you start to see the trickle down effect of areas. And again, if we continue to see this lag in the market, staples leading, you may see some of these stuff that's underperforming start to turn around like a CL, or you got your CLXs here. Again, had a nice volume day pulling back. Kraft Heinz is one that there was some option activity yesterday in. So we got the breakout, the pullback, looking at 33 near term, possibly 36.50 from a trend standpoint.
Yeah, I like that one.
Altria, again, off the kind of this kind of pop here. Sorry, it's right here actually. Looking at 58. So again, there's some trades in rather than just saying, hey, these are long-term investments.
Yeah, and I didn't look at Kraft Heinz. I like that one too, that quite a bit. That's all we're talking about. I'm not talking about buy and hold this forever. I think Coke, when we talked about it near the lows, that would have been reasonable because you could have done it as a
Yeah,
dividend stock. But
that
now
was the
it's
dividend,
you
right? Right,
can't
right.
do it. You can't play it for this. It was a dividend aristocrat that would have played out there, and we talked. Brandon and I talked about it for 3 weeks running,
Mhm.
and now we're up 15%, and you would have got a dividend payment coming up here shortly. But I wouldn't buy it for a dividend. It's just to pull back and run again. So watch for something else in there. Um,
So what about energy, Blake? What are your so again,
Energy,
we got kind of hitting our bulls and bears at the same time, but
you
what
know,
plays do you like in the energy space?
pretty much all of them. I mean, honestly, they kept their margins. They haven't really slipped too far, and crude is in the sweet spot. I've said 68.78, 68.78 over and over and over again, and we're now near 68. So this is
Right.
discounted for oil prices. As long as demand holds, I don't need it to go up. I just need it to hold here.
Yeah.
The 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 oil and energy companies make their margins. That's all I'm talking about. I'm not
Right.
saying growth. I'm saying they make their money. It's a reliable investment. Again, not a buy and hold. Swing it up. Take ExxonMobil and CVX, and I mean just go down through the list. And there's opportunities because you're
Yeah.
discounted, and it won't take a lot to get back up there. They just have to maintain.
Right. So you look at the energy sector, XLE, a little bit of a painful week, but last 3 weeks it's only down 0.7%, right? So yeah, we're pulling back towards support. But if we look at kind of the bulls and bears here, um, again, we got Tyson in there as well, Walmart
Oh
CVX
yeah, I
too.
forgot that, Tyson.
CVX, I mean, look, I mean, this is one that during my sessions we've talked about playing this a number of times off of the lows down here. Again, we may have room back to 165 as a trade off this level. So we took it here, we took it here, where we bought the stock and a put. We just had the dividend get paid, so you got 3 more months. So the timing of the dividends will work as much for that protected put, like a married put buying the stock and a put. But near term, I think 165, that was my target back here off the lows. We talked about getting long and with a married put as well. So what do you think on CVX? I mean, it pays a 4% yield.
Yeah, and that is buy the bounce and go for a swing high, and at least initially. But this consolidation is big. It might be able to get the 20-point move on that consolidation for the last few months, and you can see this is what happens. We coil up and explode. So,
Yeah, so kind of is it coiling in downward channel, kind of coiling up here. I probably should redraw off these highs right here. But anyway,
and a break of
um,
a channel is the break of a bearish channel is a bullish price pattern.
I mean,
But
this could be a long-term bull flag. I mean, when
yep.
you think about it from a monthly perspective. But yeah, I mean, it's interesting here what's going on. A couple of energy stocks that I kind of liked. Oxy's one that had some long call activity last week. I've been looking for this thing to kind of cross the 10-day exponential. And so I have this kind of Keltner swing study set here, but looking for this to kind of break through the 10 and the 50. It's all kind of lined up here. So if we can break through on volume today, that's not a bad kind of opportunity to enter with a stop down here 47.72. ConocoPhillips is below its 50 a little bit more. The 50 days up here at about 100. But again, we start to break through, volume expands. We almost did it yesterday. I think these are good opportunities. And for Oxy, that's the closest to a setup here, looking for about a $60 target. And again, we got resistance at 52, but if we clear that, form a higher low, break to the 10 and the 50, volume, all that lining up, I think it's reasonable we could see 55, maybe 62.50
Mhm.
in the coming weeks to maybe a couple of months here in Oxy. So yeah, I mean, I was with you. I mean, yesterday I had my 5 minute. Don interrupted me, but no, I'm just kidding. Talk about his butterfly, but no, but the idea is that I mean, these are the areas where you're seeing option activity this week. These names, but it's
And
not all bullish,
no,
Blake.
and just
You and
remember
I
when you're
agree
doing
on
the
you. Sorry, go
options
ahead.
strategies, you don't get the dividends. So just be aware of that if you're doing it for longer time frame. Yeah, there's bearish. You'll notice banks and financials and tech. I'm bearish financials and tech. Yesterday was a breakout. There's still room on the downside for
Right.
Micron and Broadcom, but this is not a good drop. I mean, if this was energy, you'd say, hey, we're going to
Mhm.
defend the lows. that
Yeah.
sell-off was on higher volume, and we just ate up anything that was really trying to push through there. So I do think Micron is going to at least retest the 87 area, but I'm looking for a new 52-week low.
Yeah. I mean, the 75 puts were being bought on MU
Hmm.
um, for this week. And so it's not going to get down there. But the idea is that, look, I mean, I'm looking at this thing 85, or I talked about this yesterday, did my 5 minutes on MU. So I like that one. Avago, Broadcom, again, we're seeing the drag in technology right now, right? These stocks have gotten way ahead of the game here. Critical level support 195. Expected to close the gap here back to 180, or you're looking for
Yeah,
maybe an overshoot ahead of the earnings?
I think it's going to go at least to 180, but I am actually looking for it to get all the way down to 160.
Yeah. So I mean, like we may be eroding. I mean, there's been a lot of stocks really seeing weakness on earnings, even if they beat Nvidia. It was a big earnings, but margin. Okay, we can whatever dispersion trade's done, right? We saw that June
Mhm.
20th of last year. Blake and I talked about that on Wednesday. So but I like the financial story too. I mean, so we got BX here, the Blackstone company, rolling
Yeah, and
over core high.
I give bearish trades on that one all the way back up there at
Yeah.
185 and all the way up at 190, and I said this is a bearish opportunity.
So we kind of had the reversal here. So we hit the target for the trend there. So you get another kind of seed wave here, and oops, not drawing the right tool. But yeah, I mean, we could readily see ourselves back to 120 with the headwinds and housing, et
And
cetera.
private credit, they are
Yeah,
hugely over leveraged in private credit.
exactly. And ally too, right? So we break support here.
Mhm.
We could readily go back to 33. Makes sense to kind of take the downside swing. And, again, I've been disappointed that we broke out here in these stocks, but AG&C finally rolled. I have a put in NLY. It's been outperforming here, but I'm still looking at these things rolling over on default risk in home loans. Again, still we're talking high yields, benefited by the drop in yields, the 10-year going higher, but I still think these are areas that have room to run to the downside.
Yeah, even just
Ford,
half. It's
yeah.
huge.
And Ford, there's bearish trades yesterday, and Ford was pretty significant. It was over 30,000 contracts on Ford, $4
Wow.
puts being bought for January. So I mean, somebody's taking huge bets that Ford's going to have a lot of downside here, and it does make sense. We just saw the PCE report, not great. Yeah, we might be a little bit rat support right now on Ford. We start to break away. We could see a big move lower in Ford if
Yeah,
this trend
that'd be rough.
continues. Yeah.
Well, we are down to our last minute. I would tell you really quickly, I did on my little vacation that I took I did talk to a guy that was technology for GM, and he says there's a lot of cool stuff coming. Now, whether the economy will set up for that, uh, he does the stuff that all the stuff that interacts and self-driving and all the stuff that all that the things that you're trying to compete with Tesla and all. And he says there's a lot of cool stuff coming, and the CEO's got a good grasp on things, but the chart doesn't seem to say that it's time to buy into these yet. So we'll see.
You gotta have money to buy it, right? I'm like,
Yeah,
look, the G in growth, GDP, has been government spending, right? If we're gonna pull back on that, I mean, it's gonna have to we're gonna have to rely on it somewhere else. And if you're banking on, okay, we're gonna be a manufacturing economy, that doesn't happen overnight. So it's
nope.
33% of production occurs in China. We're like the second, like 15% or something like that. We're not going to catch up in a month, right? So the idea is that recession just seems like we're really going that way. And the bond market's certainly been signaling that as well.
Yeah, bond market signaling and like you said, that's not a fast process. And we
So
won't
say,
even know we're in a recession for at least 6 months. So there you go.
right. I mean, Russ, they're going to call it a year later. So we could have a
That's right.
4% GDP now for the first quarter, and they'll just revise it away a year later, say, nope, we're in recession. Sorry. That's what happened
We
in,
we were totally in a recession. We just didn't tell you, so
yeah.
we're hoping you'd keep spending, but we're not spending.
Psych.
So
Staples asked about Oxy. I was looking for Oxy to cross above the 10-day exponential on above average volume. So ConocoPhillips got a little bit room to go, but to get there, but close.
yeah. Well, everybody, we've got to jump so Don can take control and run in our main room. So have a fantastic day today. Have a fantastic weekend. Brandon, thank you as always. I
Thank you
always
as well,
like
Blake.
doing these.
And
So
thank you to everybody for coming here, making it. Love the interaction too.
Yes, thanks for being involved. Lots of comments. I've tried to stay on top of them. So thank you once again. We'll see you in the main room, and we'll see you next week.
Have a great one.